The line didn't just move, it disintegrated. For half a decade, the global banking machine stood guard at that mythical $50 ceiling, propping it up with mountains of synthetic contracts, emergency margin hikes, and a coordinated media fog thick enough to blind an entire generation of investors. But 3 days ago, December 6, 2025, that ceiling didn't crack. It ceased to exist. Silver didn't tick up. It escaped. Ripping past 59 like gravity suddenly stopped working. And today, Tuesday, December 9th, we're witnessing something the modern financial system hasn't allowed in nearly half a century. Real, unfiltered price discovery. The talking heads on TV look bewildered. They're reading off teleprompters telling you this is an overreaction, a speculative blow-off, an RSI that's too hot. They say 59 is expensive. They're lying. 59 isn't a climax. 59 is the basement level of a skyscraper that nobody has bothered to measure. Because the part they never mention, the part JP Morgan would set itself on fire before admitting, is that the force keeping silver suppressed wasn't just derivatives trickery. It was a physical cushion, a global stockpile, a hidden reservoir of real metal that the world has been devouring, ounce by ounce, panel by panel, vault by vault, since 2021. And I've followed that trail like a forensic accountant chasing a disappearing fortune. The numbers aren't concerning. They are apocalyptic. Since 2021, humanity has consumed 1.1 billion ounces more silver than it mined. Let that detonate in your mind. 1.1 billion. That's the same as erasing the total annual output of Mexico, Peru, and China combined for an entire year. Gone. Vaporized into solar grids, cemented inside landfills. Locked in private strong rooms from Mumbai to Dubai, that buffer, those billions of ounces built over decades, was the hidden reservoir the banks siphoned from to fake stability. And this month, that reservoir hit zero. So in the next few minutes, I'm going to pull back the curtain on the vacuum effect. Why the space between 59 and 100 isn't resistance? It's empty sky. I'm going to show you how the solar explosion has made silver demand brutally inelastic. And I'm going to reveal how the Indian giant quietly accumulated the bottom while Western analysts laughed at the top. The deficit is no longer a forecast. It's a crater. The vaults aren't low, they're hollow. And the vacuum isn't forming, it's already sucking. This entire story starts with the hole we dug. Because before you understand how we sprint to triple digits, you have to understand the pit we're climbing out of. A decade ago, silver was boring. Miners supplied it, industries used it, and the leftovers padded vaults in London and New York. Stability was manufactured by surplus. Then the world flipped. In 2021, the deficit flickered to life. By 2022, it detonated. The Silver Institute logged a deficit of 237.7 million ounces. In 2023, another 140 million vanished. In 2024, boom, another 215.3 million ounces evaporated. And 2025 is closing with early numbers showing an additional 200 million gone. Add the official deficits together and you get roughly 800 million ounces missing. But that's the sanitized version. The real drain includes the ETF exodus, the LBMA hemorrhage, down 30% from its 2021 peak, and the tidal wave of private stacking that never hits official ledgers. When you combine what's reported with what's slipping out of view, the true shortfall isn't 800 million, it's 1.1 billion. Let me paint that for you. The entire global mining sector produces around 830 million ounces per year. For 5 straight years, we've been operating with a hidden deficit larger than the planet's entire annual supply. Where did the extra metal come from? It came from the shadows, legacy hoards, government stashes, institutional vaults built in the 90s when silver was an afterthought. That was the ghost inventory, the emergency stash the banks raided to plug the holes and pretend everything was fine. But a savings account, no matter how big, eventually hits zero. And that happened this week. That's why 59 shattered. The phantom silver that kept prices unconscious has been bled dry. The LBMA float, the metal actually available to lease, is functionally non-existent. COMEX registered inventory is down to fumes. Now, every solar panel, every guidance system, every smartphone must be fed with silver mined in real time. No buffer, no shadow inventory, no slush fund. And when demand is non-negotiable, when industries can't reduce usage no matter how high the price climbs, removing the cushion doesn't cause a smooth price adjustment. It causes a detonation. Those 1.1 billion ounces weren't used up. They were the anchor. And the moment that anchor disappeared, the balloon didn't rise slowly. It shot for the stratosphere. Hold on to your seats because the first myth Wall Street loves to feed you is that skyrocketing silver will crush demand. They say if silver hits $60, $80, manufacturers will quit buying. They'll switch to copper. Solar panels will shrink. That, my friends, is pure fantasy. And I'm about to dismantle it with a single word: TOPCon. For years, the solar sector ran on PERC technology, efficient, reliable, and consuming about 10 milligrams of silver per watt. But PERC hit its ceiling. Efficiency and energy is king. So, starting in 2023 and 2024, the entire global solar assembly line pivoted to TOPCon and HJT cells. Here's the kicker. TOPCon uses 13 milligrams per watt, HJT 22 milligrams. Not less, more. Every new panel demands more silver, not less. Copper, they tried. It corrodes. It kills a 25-year warranty. You cannot risk rust when selling solar farms built to last decades. The answer is, and will always be, silver. Now consider the economics. A $200 panel at $25 silver had $15 of silver embedded, 7.5% of the cost. At $59 silver, that cost jumps to roughly $35. Does production stop? Does the government cancel renewables mandates? No. Price rises marginally, production continues. Demand is inelastic. A doubling of silver barely dents final product costs. That gives silver a kind of pricing power most commodities can only dream of. Oil doubles, people drive less. Silver doubles, Samsung, First Solar, Tesla, they keep buying, and the structural deficit only fuels this. In 2023, solar devoured 193 million ounces. 2024, 230 million. By 2030, projections suggest solar alone could consume 85% to 98% of global silver reserves. Not annual production. The planet is being mined into submission for green energy. And the easy-to-get silver, gone. When you see silver at $59, think necessity, not expense. Industrial buyers aren't chart watching. They're terrified. They're calling refineries directly. We'll take everything you have. Name your price. That's why the spot price leads futures. The physical market is screaming. Look at India. While the West dumped ETFs in 2023 to 2024, India moved with surgical precision. February 2024, a month that will echo in history. India imported 2,295 metric tons, around 73 million ounces. To contextualize, the U.S. Mint produces 20 million silver eagles per year. In 28 days, India bought the equivalent of 3 to 12 years of U.S. production. Why? Because they foresaw the 1.1 billion ounce deficit before the rest of the world. Gujarat's solar factories, the Gift City Exchange, India knew exactly where demand would surge. They scooped up the bottom at $22 to $24, draining London vaults while the LBMA slept. Now silver is $59. Will India sell? No. Silver in India is wealth. It's industrial leverage. That metal isn't returning. It's in jewelry, electronics, vanished from free float. The 1.1 billion ounces didn't evaporate. They moved from weak hands to strong hands. The West sold insurance policies for pennies. The East cashed in on the real deal. JP Morgan saw this. They tracked the flows, watched 73 million ounces exit in February 2024, saw the flood continue through 2025. That's why shorting stopped. That's why tamp downs failed. You can't fake a market when physical metal is gone and the Indian whale is poised to buy every dip. The short sellers' backs are broken. The West must pay a premium for every ounce. December 9th, 2025. $59. We enter the vacuum. Resistance exists when sellers wait to exit. Who bought at $65, $75, $85? Nobody. No overhead supply, no bag holders. Technically, the sky is clear. A blue sky breakout. Bitcoin, Nvidia, now it's silver's turn. And the target, $100. Why? Inflation adjusts the 1980 $50 high with government CPI numbers, $170 today. At $59, silver is still 60% below its real all-time high. $100 is the psychological magnet. The vacuum accelerates like this. Shorts cover, hedge funds scramble, retail FOMO floods in, and industrial panic triggers hoarding. Scarcity breeds higher prices, which fuels more hoarding. The 1.1 billion ounce deficit created a perfect storm. Nature hates vacuums. Price will rush in to fill it. I predict $59 to $75 before year-end. $100? Not a 2030 dream. 2026 reality. The 1.1 billion ounce deficit wasn't luck. It was a wealth transfer. From impatient paper traders to patient physical holders. West to east. 5 years of signals, public reports, and vault data. Ignored by most, seized by the smart. The line at $59 is broken. The vacuum is pulling. If you're clinging to paper, SLV, or unallocated accounts, you're in a burning building hoping the insurer survives. Metal in hand is survival. The 1.1 billion ounces are gone forever. The next billion? They'll cost multiples of $59. The squeeze isn't coming. The squeeze is here. $100 is waiting, and we're moving fast.